Firstly, allow me to congratulate Dr. Wang and Dr. Miao and the Center for China and Globalization for the launch of this important publication. Why is it important? I think it's been mentioned a few times, including by Ben and the earlier speakers, because the perspectives of foreign business leaders have been relatively muted amidst commentary about geopolitics, national security, human rights, regulatory crackdowns, and a host of other issues. But business leaders have an important role to play in providing information about the benefits of trade and investment in China, as Mr. Allen said earlier. The economic consequences must be properly considered as the boundaries between collaboration, competition, and rivalry are redrawn. This publication makes an important contribution in allowing those important perspectives of foreign businesses operating in China to be heard. Now, I wrote my long article about a year ago. Up until that time, to my knowledge, there was mainstream international news media hadn't featured any substantive discussion about the business opportunities for foreign companies during the period of the 14th five-year plan. And that was a lot different than what I remembered was the case at the time of leading up to the release and finalization of the 13th five-year plan. And in contrast, 1 year ago, we looked at foreign holdings of onshore Chinese equities had increased significantly in 2020. And that trend continued since then, despite market volatility and regulatory crackdowns. Up to the last September, Chinese equities held by foreigners were at a record level of 1.77 trillion yuan, which is a 40% increase over the year. A headline from the Australian Financial Review last April sums the sentiment quite well. This is the headline: forget politics. Foreign investors are flocking to China. Foreign capital is pouring into China at record rates as investors ignore geopolitical tensions in their search for yield. So this is the background against which I decided to write an article about the opportunities which foreign companies have to invest in and benefit from development trends in China. In my article, I talk about 5 reasons why I think China will continue to present opportunities over the 5-year plan period. Briefly, they are market size. As Craig mentioned earlier, for many sectors, the size of the market in China means that MNCs can't be leaders without being successful in China. And that phenomenon is only going to continue as China continues to grow and innovate at pace. Second, innovation. MNCs need to participate in innovative development in China to stay competitive in China and in other markets around the world, with China offering scale, cost, and speed advantages for developing and commercializing new technologies and business models. To be successful, as we all know, MNCs need to be agile and innovate at China speed. 3, foreign investment will continue to play an important role, with opportunities relating to industry upgrading through supply of advanced technologies, satisfying the demand of Chinese consumers, and supporting China's transition to an innovation-intensive, consumer-led economy. 4, of course, the policies the Chinese government has enacted and will enact to catalyze foreign investment into the sectors and the geographies that need it most, and to encourage further localization of value chains. And finally, efforts to facilitate and reduce the cost of cross-border trade through free trade agreements and actions to promote high-quality BRI development increase the attractiveness of using China as a bridge and headquarters from which to expand to and invest in markets across Asia. Of course, the creation of a highly integrated market through the implementation of RCEP will be positive for FTI, both from within the region, but also from outside the region. The article goes on to look at opportunities briefly in 5 areas around Belt and Road projects, with priority being given to cooperation in digital, green and health-related projects, around digital technologies, with the real economy helping transition traditional industries to upgrade and fostering the emergence of new industries. Around international cooperation in China's transition to a green, low-carbon economy in areas relating to provision of financing, technology and advisory services, around improving the quality and accessibility to public services, including education, medical services. We've got Roberta here from UFH, and elderly care, and opportunities around the continued opening of the banking, securities, insurance, funds and futures sectors, and the steps that are being taken to increase connectivity of capital markets. I'm happy to see the encouraging progress that's been made over the years since I finished the article. But one of the key points I make at the end is that for the first time in recent memory, a bigger challenge faced by MNCs is not the lack of opportunities in China, but rather the surge in misunderstanding and negative sentiment towards China in many countries, and the impact that's having on attitudes and decision-making by governments and companies. The ongoing travel restrictions, while I agree with what Jorge said, the ongoing travel restrictions are indeed exacerbating that phenomenon. I think Ben mentioned it as well in his comments. In addition to helping with attracting and retaining expatriate staff, the earlier resumption of business travel to and from China will be an important step in helping to bridge the information gap with head office decision makers and other important stakeholders, including politicians and academics. Toxic atmospherics in some markets are leading to the attribution of higher risk to China investments by some investors. Greater China exposure isn't necessarily viewed in the same positive way as it once was. And that's ironic considering the way that global investors are piling in to increase their holdings of onshore Chinese stocks. You asked me to say something about Australia, so I will very briefly. In Australia, it's heartening to see some companies cautiously poking their heads above the parapet to defend the benefits of investing in China. Only yesterday, the Australian Financial Review had an article about Cochlear's strategy in China. Let me just mention a few extracts. According to the CEO, relations between Cochlear and the Chinese government have never been better. We've had very strong local support from the city and provincial level governments in China, both in terms of helping us to establish the factory and getting all the necessary licenses. We have very good support in doing ongoing clinical research in China to help firms deliver hearing care in a more expansive and effective way. This is important. Medical device companies that have relied solely on imports into China have struggled to retain their market share, whereas companies that manufacture locally have done a better job succeeding over time. The article concludes with a key message that there's a strategic shift occurring in Australian business relations with China as companies deepen their government relationships and set up their capital investment in Chinese-based facilities. Now, while we're not seeing that happening universally across our membership base yet, it's certainly very good advice. So in conclusion, as was the case with companies that invested early in China's reform and opening up, I believe that opportunity will still reward early movers that are able to balance the different expectations of national governments and communities towards issues such as national security, economic growth, competitiveness, local job opportunities, and resilience and sustainable development on the one hand, with aligning their value proposition and business strategies in China with the goals and economic and social priorities in the 14th Five-Year Plan. I'm also cautiously optimistic that international cooperation in tackling climate change will see more foreign investment in China and more green partnerships with Chinese companies in China and in developed and developing countries around the world. Thank you.
Thank you, Mr. Barber, for your views and advice. Now it's time for Ms. Roberta Lipson, founder and CEO of the United Family Hospital. Welcome.
Thank you so much, and thank you to Dr. Wang and Dr. Miao for the invitation. And